You've announced this morning your largest summer schedule for London with 14 new routes. We're talking here a lot about the cost of living, though, not just in the UK, but elsewhere, the way that consumers are going to be squeezed. Do you think that your schedule will stand up to that kind of cost of living pressure?
Good morning, Anna, and to your viewers. Yes, we think it will. We're seeing a dramatic recovery in bookings over recent weeks, particularly as the UK and Europe emerges out of the coronavirus pandemic. I think there's a huge pent-up demand for travel, particularly short-haul to the beaches of Europe. We've seen it in the school midterm break last week. We see it again recurring at Easter. People are more price sensitive. That's why I think they're switching to Ryanair. We have the lowest fares of any European airline. We've hedged our fuel. We're 80% hedged out to March 2023 at about $63 per barrel. So we're in good shape to pass on extraordinary savings and low fares to people. And we're seeing that in our bookings. Now, clearly, our bookings have been impacted over the last 5 days by the tragic events in Ukraine. But I think, that will be, that disruption to bookings, we think, will be short-lived. And people, while obviously concerned about developments in Ukraine, will, I think, return to booking their holidays for Easter, for summer. And we see a very strong recovery, particularly in air travel in and out of London this summer.
OK, Michael, just on that, what kind of impact is this having then right at the coalface, if you like, of aviation? What kind of hesitancy are you seeing? Can you quantify that? How reluctant are people to book, or how much more reluctant than they were?
Well, I mean, last Friday morning, for example, last Thursday and Friday, our bookings were down about 20% on the previous week. Over the weekend and yesterday, that has softened down about 10%. But that's down 10% against what were record bookings over the past 3 or 4 weeks. We see our forward bookings into Easter and summer recovering very strongly. The other big impact, obviously, will be fuel. I mean, spot oil is now above $100 a barrel. There's a huge number of airlines across Europe who are unhedged, and I think they will be under enormous cost pressure. There'll be huge upward pressure on airfares this summer, but thankfully Ryanair is extraordinarily well hedged, and we'll be able to pass on that the benefit of those hedges to our customers in the form of lower fares. But we see passengers booking strongly at the moment. I think there is a bit of a not just pent-up demand, but I think a concern that if people don't book early, they won't be able to fly to the beaches of Europe this summer. Long haul will clearly be affected, obviously, with the no-fly bans across Russia, Belarus and Ukraine. Asia is going to be an extraordinarily difficult place to travel to. COVID, I think, will mean that there will be a much slower recovery in long-haul travel. But short-haul, European city break destinations, we think will do very well, as long as, and I think we all hope that the situation in Ukraine is resolved quickly and in favour of the Ukrainians.
Good morning, Michael. Obviously, 14 new routes from London is a very impressive expansion. I assume that these routes offer a much lower return on investment from a business point of view, or otherwise, if they don't, why weren't they incorporated years ago?
Well, I mean, we're taking delivery of 65 new aircraft from Boeing over the last 4 months and over the next 3 months. So this is all new capacity on very fuel-efficient new Boeing MAX aircraft, 4% more seats, 14% less fuel. And that has allowed us to emerge out of this pandemic, I think, in a much stronger position. We're well hedged on oil. We'll be able to pass on lower fares to our customers all summer long. And I think we will see a very strong performance. We're willing, as we have always been, if there's, we've gone through 2 years of COVID, and if we have to go through many months of the tragic events in Ukraine, we will lower fares. We will always take the pain on fares and yields, and we'll worry about the return on investment over the medium to longer term.
OK, so Michael, you've outlined the fact that you've had a very aggressive hedging strategy in oil, which has been very beneficial to you. It's proved very prescient. At what point do you have to start reacting to the fact that much higher oil prices now? They're elevated all throughout the curve. So I guess not only at what point do you have to start aggressively changing your hedging strategy, when is that going to feed through to higher fares?
It all depends on, as you well know, Mark, it all depends on what happens to oil prices. Like prior to last Thursday, we had hedged 9% of our summer 2023 fuel requirements at about $74 a barrel. The market was in backwardation, high short-term prices, but out into summer 2023, reasonably low prices. We've 9% of summer 2023 hedged, but the rates took off last weekend. Whether they are sustained up at, I think you can, the rates into summer 23 are now about $95 a barrel. We do believe that over time those rates will come down. US shale manufacturers, at these price levels, there will be more production. But it's impossible difficult for us as an industry or anybody to know what's going to happen with sanctions on Russian oil and gas and what those developments will be. All we can point to at the moment is that we're 80% hedged out to March 2022. The underlying price is $63 a barrel. We also have some caps in there as well, which means we can secure low fares for customers who want to get away with their families at Easter and this summer. And that's why we're opening up 15 new routes from London. That's why we're expanding so strongly this summer.
How are you changing your schedules, Michael, based on the war that is now taking place in Ukraine? I mean, clearly not flying there anymore, and you weren't flying over Belarus airspace, I think, after the forced landing of that Ryanair jet in Minsk just last May. So perhaps you've been avoiding that particular airspace for a while. But how are you having to rethink routes or replan schedules as a result of what we're seeing, the geopolitics, the war in Ukraine?
Yeah, I think it's a good question, Anna. We were Ukraine's largest airline. Now, we don't have any aircraft based in Ukraine, but we were flying to 4 airports in Ukraine: Kiev, Kharkiv, Odessa, and Lviv. We've clearly abandoned or cancelled those routes as of last Thursday morning when the Ukraine airspace was closed by the European safety authorities. We think that was the right decision. We will pivot that capacity for the next 6 weeks, and probably, I think, for this summer, that capacity, which generally originates in Poland, in Romania, in Germany, and in Italy, will pivot away from Ukraine. We'll reverse those aircraft assets and start flying more flights to beach destinations in Greece, in Italy, in Spain, and in Portugal. We think it will not have, because we've no aircraft based in Ukraine, while we'll lose we would have expected to carry about 2 million passengers in a full year to and from the Ukraine. We will pivot that capacity and carry those 2 million passengers elsewhere from those Central and Eastern European markets, where Ryanair is the #1 or the biggest carrier right across Central and Eastern Europe.
Given that Ryanair has proven itself resilient to such shocks and disruptions because you don't rely on government subsidies and you have a little bit more flexibility, you're prepared for this outcome, what will you use with your better position, your better resilience? Will you be looking to acquire some weaker rivals over the next year?
I don't think so, Mark. I think what we expect to do this summer is to grow very dramatically. We're taking delivery, as I said, of 65 new aircraft from Boeing over this winter period. This fleet in summer 2022 will be about 15% higher than it was pre-COVID in summer 2019. We expect to see our traffic, which was 150 million in 2019 pre-COVID, grow to about 165 million in the coming year, which is our year-end March 2023. And we think that growth will be hinged on our ability to offer lower fares and undercut competitors who are simply unable to compete with either our cost base or our exceptional fuel hedging position, which I should add is not really prescience, it's more dumb luck. But we're happy to pass on the benefits of our good luck to our customers in the form of lower fares.